Hey guys, welcome to another weekly focus. I hope you had a great week. So today we'll just go through the trades I had for last week, and let's do a trade recap real quick, and then we'll look at the pairs we have for next week. So let's pull this up right here. Alright guys, so I had 3 trades this week, and it was quite like a slow week, and that's because there was a lot of holidays in the US. And when there's a lot of holidays in the US, the markets tend to be very slow. So the movement is like usually very slow compared to normal days. So let's look at this one. Let's look at the gold position. So I had a buy on this, and I haven't updated this this area just to show you how prices played out. But I had a buy on gold, so right here. And my aim on this trade was actually to test these highs right here. And right now, I think price did a little push to an area like this and it's kind of consolidating or just playing out slowly. And again, the holidays in the US is affecting a lot of these pairs. So I had my buys right here, and this was my target point just to see if we can test these highs. And I'll show you once we do the market focus thing. Once we break down gold, I'll show you what I'm looking at and if I still want to hold these buys on gold. So this is what I had on gold. I haven't updated this one yet. Now I had trades on NAS100. I had a buy, I had a sell on NAS100. So I had sells on NAS100, and the intention on this was just to take prices to the downside. So you had this massive move to the upside, you had price moving to the downside, and you had this slow movement from the buyers. So you can see this choppy movement from the buyers, and so I was looking for sells on this to take prices to the downside. So right now price tried selling, and then we had an impulsive move again to the upside. Again, I'm still gonna reanalyze the pair and see if I want to hold the sells or I just want to close it and take the loss on this one. Alright, so let's look at the S&P. The S&P one, I had sells as well on the S&P. So when I trade the S&P and I trade NAS, it's like a mirror image thing. If I have sales on the S&P, I have sales on NAS100. So I had sales on NAS100, and I was looking for sales on the S&P500 as well. Massive move, break from the sellers, choppy move from the buyers, and I was looking for those sales. So on the S&P500 one, price eventually took me out, so I got stopped out on this. So this is a -1 on the S&P500. Now the NAS100 trade is still running. My trade on gold is still running. So but the S&P one -1, and so I'll reanalyze again and see if there's an opportunity to enter or maybe go in for buys. We'll look at the charts in a bit, and I'll tell you what I'm looking at. So that's it for the market recap. I didn't have lots of trades, just 3 trades, and one has taken me out already, and that's the S&P. All right, let's come back to the charts and let's look at this. Alright guys, so let's start with the DXY, and the DXY is the first pair I look at. And the reason I look at the DXY is simple. If you understand the direction of the DXY, it makes it very easy for you to understand other pairs or the direction of other pairs. So we're looking at this on the DXY. This is something I spoke about last week, and I had this trend line from last week. So this is what I was looking at last week. We had an impulse on the DXY, we had a correction, we had an impulse, and I was expecting this correction. And while expecting this correction, you can go watch the previous episode. I said if this correction starts coming down, you should expect buys on certain pairs, and that's why I took the trade on gold. And at the same time, while this was still playing out just to complete this move to the upside, I had those sells on the S&P. So because this price pulled down, because we had a pullback on the DXY, it made it difficult for those sells to take off on NAS100 and the S&P. But we'll look at this and I'll show you what I'm still looking at, because there's still a possibility for us to have sells even on US30. But let's look at this on the DXY. Let's understand the DXY and see what's happening. So 2 questions. The first one is, where is price currently trading at, and where is price most likely going to gravitate to? So when you have an impulse like this, you have a correction, you have this area set already, you have another impulse, and you have price pulling back to an area like this. So where is price currently trading at? I like using psychological levels to come up with this. So price is currently trading between 107 the psychological level, and 106. So there's just two things that can happen at this point, and the first one is if we get a bounce or a rejection around 106 and we see prices coming back to the upside, we can see a test of this area of 106 and we see prices moving again to the upside to test 107 and eventually test an area like this. So that's the first possibility, and it's very possible price can do something like that, just reacting off of this principle of psychological levels. Now let's look at something else. I'm gonna zoom out like this. So looking at this, you have an impulse again, you have your correction, you have an impulse, you have a correction. So this impulse correction sets this trend line. So if we're using this trend line, again, just another principle, the second principle, is there a trend line we can work with? And yes, there's a trend line we can work with. So you have an impulse correction thing, you have another impulse correction thing. So if price holds at this area right here, then you could see prices moving again above the psychological level of 106. You get to pull back to test the trend line. You have a psychological level around here. So once you combine stuff like this, you could see prices taking off again to the upside. The first point of interest for me has to be 107, and the next point has to be this highs right here. So these are all possibilities. So this is something I'm paying attention to coming into next week. Now that's my primary bias on the DXY. So my primary bias on the DXY, impulse correction thing, and we should see prices taking off again to the upside. That's very simple. Now if this doesn't happen, you could see prices breaking out of this area like this. So once we see a breakout of this area, you might see a test of an area like this, and you see prices moving again to the downside. Now this is also another possibility, but I want to stick first with my primary bias, and if this bias fails, then I'm going to look for the next possible one. And the primary one for me is an impulse correction thing right here. You have an impulse correction, and I'm expecting prices to move again to the upside. So this is a structure I'm looking at right now, and I just want to stick to this structure. Unless the structure fails, then I know there's another possibility for prices to move again to the downside. So looking at this, and if you remember, I told you I had sales on NAS, I had sales on the S&P, and I have buys on gold. So just understanding what's happening on the DXY is going to affect all of those pairs. So let's say the DXY decides to move to the upside like this. Then if you look at the trade I have on gold, it's going to be very difficult for those buys to take off, because a movement like this on the DXY is going to cause those other pairs to drop to the downside. However, if the DXY fails to respect an area like this and it breaks out of this area, once you see a pullback and price that starts moving to the downside, you could see those buys on gold sustaining for a little bit longer. So those are all possibilities. But then let's look at lower time frames. I'll look at this on the 8-hour time frame, and let's just see. So on the 8-hour time frame, and as I move to lower time frames, I'm paying attention to areas like this and areas like this. So what I'm looking for is just some kind of indication that price is finding it difficult to move to the downside, and for us to see possibilities for prices to move to the upside. So I'm going to do this, and for us to see possibilities for prices to move to the upside. So let's zoom into the area that's where price is currently at. So remember, we had an impulse thing and we have a correction. So as a correction comes in, I'm looking at the DXY now, and I'm asking myself, if price has to play from, say, this psychological level of 106 all the way to 107, then as the correction starts coming in, price is supposed to tell me there's an inability around this area for prices to move to the downside. And once I see this inability and I see the setup, then I can say confidently there's a possibility for prices to move again to the upside on the DXY. So looking at this on the 8-hour time frame, all I see is just price coming down. There's a pullback, price moved again to the downside. Now there's some kind of an inability if you look at this. So once we look at this piece right here, maybe on the 4-hour time frame and on the hourly time frame, it might tell us, or it might show us more reasons as to why this bias might take off to the upside. So I'll step down to the 4-hour time frame. Let's look at this on the 4-hour time frame. Cool. So as the pullbacks are coming in, so we're looking at this on the 4-hour time frame. So you look at this, you have a sell, there's a pullback, you have another sell, there's a pullback. So you have a sell, there's a pullback, and we've had price attempting the sells again. There's an inability around this point to take out these lows right here, so we might see prices moving to the upside. First point of interest for me has to be this psychological level of 107, and if price goes through the psychological level of 107, this is the next point, this highs right here. So that's just a breakdown thing for me on the DXY. I'm still expecting prices to move again to the upside, and once I have this understanding, and let's say price starts moving to the upside and I have my buys on gold, then I'm going to manage those positions on gold accordingly, because a movement like this to the upside on the DXY can cause massive sells on pairs like gold. So just having an understanding of what the DXY is doing, it helps you a lot. So you can use it to how can I say, you can use it as a check for other pairs, just to be on the safe side. So that's it for me on the DXY, and we can look at this on the hourly time frame. But again guys, I look at the hourly time frame just for my execution. So let's look at something like this on the hourly time frame on the DXY right here. So you have your impulse thing, you have your correction. So as the correction starts coming in, now you can look at the correction in details, like you can see everything about this correction. So you have this sells, you have a correction thing, you have this sells, you have a correction, you have this pullback, you have this pullback, sells, inability to take out the lows. We should see prices moving to the upside. So this is something I'm paying attention to. So I'll pay attention to the DXY coming into next week. I really want to see how the DXY is going to move, say during the early days of next week, Monday and Tuesday and stuff like that. If this guy starts moving to the upside above 106, you get a test of this area, or you even get a deeper test to this trend line, then you could see prices moving to the upside. And it's very simple. So we're looking at this. If I was trading the DXY, for example, once you have this inability to take out these lows, you have price moving, coming back just to give you like a testing here, then I'll probably look for buys, say above this psychological level, have my lows here, and you can look at something like this, maybe a 1:4. So if price has to test this highs, and that's a swing position for me. So that's how I look at price. And if I had to trade the DXY, I would look for something like this, and this is like 1:4.6. That's a good risk to reward ratio thing. But you don't trade the DXY, I don't trade the DXY. So let's take this off. Now we have an understanding as to what the DXY is trying to do, and as I told you guys, look at the daily time frame. The DXY can do two things. So look at this on the daily time frame. The DXY can do two things. So we can get a reaction at this point and we see prices continuing its move again to the upside, or you get a break of this and you see price moving to the downside. There's always two sides to the coin, so you need to position yourself to see price reacting from both directions, and that way you don't get caught on the wrong side. Alright guys, so that's it for me on the DXY. So let's keep this on, let's say, the 4-hour time frame. I kind of like the price action on the 4-hour time frame, so I'm going to watch the 4-hour time frame coming into next week. Pay attention to the 4-hour time frame. If price keeps reacting from an area like this, inability to go through, expect those prices to move to the upside. Alright guys, so that's it for me on the DXY, and let's look at another pair. So the next one I'm going to look at has to be US30, or the first one we're looking at is US30. Alright, so looking at US30 on the daily time frame, this is very interesting. Now remember, we've had this trend line on US30, and as I told you guys, you had an impulse thing, you had this consolidation, and you had price taking up. So this move right here on US30, this was my swing move, this was the consolidation thing, the pivot point was set right here, and everything you see on the daily time frame on US30 is the next swing. Eventually you should expect US30 to sell back to this trend line. You look for the swing point and you take buys again to the upside. I'm gonna keep repeating this thing week in, week out, and you're gonna see how price is gonna come back to areas like this. It's just how price moves. So it's a simple principle: impulse, correction, impulse, correction. So don't complicate trading, yeah, don't complicate anything about it. It's quite easy, it's quite simple. Don't make it complicated for you. So you have your swing right here on the daily, you have your consolidation, you have your pivot point, you have your next swing. Eventually we should wait for prices to come back to an area like this. You look for the next swing, you look for the next pivot point, and for price to give you the next swing. So while waiting for this to happen, let's move to lower time frames. Let's look at, so on the daily time frame, there's nothing you can do right now because you have the swing, you have the correction thing, you have the swing, so you're waiting for the next correction. So let's look at this on the 8-hour time frame. So I had this trend line on the 8-hour time frame. Same thing, you have your swing, correction, and price starts taking off. You have your pivot point, and that's it right there. So once you have your pivot point, price starts moving to the upside, pivot point, price starts moving to the upside, pivot point. So these are all swings, and price is coming back to the pivot point. So looking at this on the 8-hour time frame, so we're right here like now. So we had price respecting this pivot point, we had the next swing, now we have corrections, and price is playing out. So on the 8-hour time frame on US30, we're expecting prices to pull back to an area like this, or maybe an area like this. So it just depends on how the structure is going to form. So you can see something like this, price pulling back to an area like this, or you can see a deeper pullback to an area like this. Either way, we're still expecting the pullbacks to come in. So while waiting for these pullbacks to come in on the 8-hour time frame, like similar to what we're looking at on the daily time frame, I'm going to show you. While waiting for these prices to pull back on the daily time frame, we had to step down to the 8-hour time frame. So we have a trend line thing on the 8-hour time frame, impulse, correction, impulse, price corrected, but this correction is now on the 8-hour time frame, so we have to look at it on the 4-hour time frame. So we're waiting for these pullbacks to come in for the 8-hour time frame. While waiting for these pullbacks on the 8-hour time frame, you can look at this on the 4-hour time frame. Now it makes a lot of sense. So on the 4-hour time frame on US30, you have your impulse thing, you have your correction, you have your impulse. An inability for price to go through an area like this, there's a psychological level here of 45,000. You should see prices coming back to the downside. Look at this structure and look at what's happening on the DXY. So remember, the DXY has this potential or this possibility for prices to move to the upside. Pay attention to this. Now look at US30. Impulse, correction, impulse, inability to go through 45,000. You could see prices coming again to the downside. That's very easy to understand. So this is on the 4-hour time frame. So simple questions again, 2 questions I always ask myself. Where is price at currently, and where is price most likely going to gravitate to? So we have a psychological level here of 45,000. We've had this impulse, we had a correction, we had another impulse. Now it seems like there's an inability for price to go through 45,000. If price finds it difficult to break through this area, where do you think price is most likely going to go to? Price would then pull back to the next psychological level, which is 44,000. Now you need to pay attention to this because you might face some difficulties. So let's say price finds it difficult to go through 45,000 and there's an inability for price to go through 45,000. Price has to then gravitate to an area like 44,000, to this psychological level right here. But you need to understand we have this trend line on the 4-hour time frame. So this could be a major thing on the 4-hour time frame. So you could see price coming back trying to sell, and you see some kind of a consolidation, and price hits on this trend line thing on the 4-hour time frame without even getting to the psychological level, and you see price taking off again to the upside. So that's something you need to pay attention to, and that's why we use 2 concepts. So that's why we use psychological levels and we use trend lines, because an understanding of this, and once you put this together, it makes it very easy. So look at this one more time. On US30, you have your impulse, you have your correction, you have your impulse. Price is currently trading around 45,000. An inability for prices to go through 45,000, we should expect prices to drop all the way to 44,000. Now we have this trend line here. Is there a trend line we can work with on the 4-hour time frame? Yes, there's a trend line we can use on the 4-hour time frame. So all we're waiting for on US30 is say a clean setup for us to take sales. If we can interpret this price, let's say on the hourly time frame, and we see a setup that aligns with what we're trading, then we can take these sales to move prices to the downside. Once price starts approaching an area like this, you have your trend line, you have your psychological level. Once price gets to an area like this, you need to pull your profit out from the market if you took the sales, because there's a high possibility buyers will step in from an area like this. So that's how I look at price, and that's how simple I can make it look. And I believe everybody can do something like this. You don't have to make it complicated. It's just looking at price action. How is price moving? Price is making highs and lows. So you're just waiting for these pullbacks. You have the psych level, inability to go through the psych level. You're looking at the next psych level. You have your trend line thing as well. So once you combine these two principles, very powerful principles, you can break down any chart. So that's what I'm looking at on US30. And we can look at this on the hourly time frame. So let's look at this on the hourly time frame. So the hourly time frame for me is just a time frame to get my executions, so my trade entries and stuff like that. I'm not looking at the hourly time frame to do any breakdown on anything. But if you look at this impulse here, you can see price moving to the upside, correction, upside, minor correction, upside, major correction right here. Another impulse, inability to go through 45,000. Sellers came through, and you had buyers struggling, inability to go through 45,000. So when you look at this, you can tell US30, in as much as we're looking at this swing move right here, or let's say we're looking at this swing move, price is still finding it difficult to go through 45,000. So once you have a break, you have a pullback, now you're looking for those sells. So that's my thought process on this, and this is a pair I'll really pay attention to coming into next week. I really want to see price failing to go above 45,000, then I'll look for those sells. Now if price stays above let's look at this on the 4-hour time frame. If price eventually trades above 45,000, this area right here, so let's say price keeps moving to the upside, then you get a pullback. It's also very easy for you to trade this, and I'll show you why. If price does something like this, all you need to look at is this area right here on the hourly time frame. So price is going to give you another trend line thing you can work with. So once you combine this again, you have a trend line here, you have a psychological level right here, 45,000. Price goes through, comes back. You can look at this on the hourly time frame. I'll probably show you the next level has to be 46,000. An area like this. So it's very simple. It's a concept I've used over and over again. So let's look at this. So let's say price decides to respect something like this. So we're looking at this on the hourly time frame. My primary bias on US30 is to see a break so I can take those sells. So once I take those sells, I'm looking at the 4-hour time frame, I'm looking at the 8-hour time frame. But let's say buyers keep rejecting the sales at 45,000 and prices move higher, you get a pullback to an area like this, then I'll look for this confluence around this area. You have this trend line thing right here, trend line thing right here, you have a psychological level, pullback and stuff like that. You have the next psychological level has to be 46,000, which is an area like this. Then you can get these pullbacks and you see prices moving again to the upside. So it's very simple, it's very easy, but you need to understand what you're doing, and you need to see price from different directions as well. So I'm still paying attention to the 4-hour time frame. My primary bias on this is impulse, correction, impulse. I'm looking for those sells. Once I have the correction, then I can take prices to the upside. So that's how I'm looking at US30, and that's how I'm going to trade US30. Alright guys, let's look at NAS100. Let's look at NAS100. So this is NAS100 on the daily time frame. I still have my sells on NAS100 and I'm still holding the sells. I'll probably close this, I'll probably keep it running, but then let's analyze this and see if there's a reason for us to keep holding. Now look at this structure on NAS100 on the daily time frame. It's very simple, yeah. impulse, correction, impulse, correction, impulse. Here's your pivot point on NAS100, pivot point on NAS100 again. So everything you see, swing moves, you have your correction, you have your swing move. So on the daily time frame, I'm going to bring this closer. We're looking at this on the daily time frame. You know, price has set the swing points already. You have your trend line thing. Now you're playing with psychological levels on the trend line. Simple question, where is price at and where is price most likely going to gravitate to? You're looking at this on the daily time frame. Price is currently trading around 2100. I'm at 21,000. So if price, so we had an impulse move, an inability for prices to go through 21,000. We had an impulsive sell, and we've seen price correcting again back to 21,000. An inability for prices to go through this area, you should see prices coming back all the way to 20,000. Now this is on the daily time frame. This is making like lots of sense to me. So just look at this. You have your swing move coming from the downside, you have a correction, you have your swing move. So price needs to come back to an area like this for us to see prices moving again to the upside. So while waiting for this to happen, we can step down to lower time frames and see what's happening around the psychological levels and see the structures price is putting or price is currently playing with. So let's look at this on the 8-hour time frame. All right, cool. So we're looking at this on the 8-hour time frame. So I'm going to do something like this on the 8-hour time frame. So this is quite easy. You had your impulsive move, you had your correction thing, you had your impulse. So you had a swing, you had another swing, you had a pullback. Once you have a pivot set on any time frame, price is going to respect that pivot point. Price is going to respect the pivot point. Personally, I was expecting prices to react from 21,000 and we see a break of this trend line. This kind of trades is like usually the most difficult ones for me, where I take sells or I take buys in anticipation for price to break a trend line. These are usually the most difficult ones. The easiest one is for you to wait for prices to break out of this trend line. You wait for a pullback, then you take the sells. But anticipating the break of the trend line it's like there's a setup I actually look for to anticipate the break of trend line. So that's very complex, and I always like my win rate when it comes to that is not as high as the normal ones I show you guys. So it's something I'm still working on as well. So I'm really improving on that, like day in day out. So let's look at this. So the pivot point was set already. You have your swing thing, consolidation, pivot point, swing, price pulling back, pivot point, pivot point, pivot point. So if you look at this NAS100 on, let's say, the 8-hour time frame, price is currently rejecting around 21,000. We had a rejection at this area. We had price reacting from the pivot point. So when you look at this, you just have you have sellers struggling, you have buyers struggling. If you're going off of the principles of trend lines, once price goes through any pivot point, you should expect price to take off to the upside, like impulsively. But every time price hits the pivot point, we have minor moves to the upside. Pivot point and minor moves to the upside. Pivot point and price is still struggling. So when you look at this, let's say on the 4-hour time frame. So I'm looking at this on the 4-hour time frame. I'm going to put this right here. So you look at this on the 4-hour time frame. Pivot point, there was a move, pivot point, there was a move, pivot point, there was a move. But when you look at these moves, it's very corrective, very corrective, very corrective. And once I saw this inability here for prices to take out these highs, I had my stop loss here and I was expecting those sells. So right now the buyers are still in control, so it makes it very difficult for me to manage a trade like this. But let's go off of our principles and see what price is trying to do. So where is price currently at? Price is trading around 21,000. Where is price most likely going to gravitate to if it finds it difficult to go through 21,000? Price is going to break the trend line and the next area has to be 20,000. So currently we're still in the buys, and it's very difficult for you to look at the sells right now. You need to be patient. So currently we're still in the buys. So what can price do right now? Price can respect this pivot point like this and just keep and keep moving again to the upside, giving you these pullbacks, and you see price moving to the upside. So it can do something like this. I don't control it, so all I can do is take my setups the way I see them playing out or unfolding, and then price is going to do its thing, and then I'm going to take maybe a loss, reanalyze, and then get the next one correct. So I'm still in on these sales, and I'm just going to keep the trade running because I've still seen price find it difficult to go through an area like this. So we could see sales coming in, but again, as I told you, if price keeps respecting the pivot points and stuff like this, you can see price moving to the upside. That's going to be a -1 for me on this pair. On NAS100, you get a pullback, and then I'll look for those buys to take prices to the next level, which has to be 2200. So let's look at this. The next level has to be 2200. So if price takes me out, let's say price moves up, it stops me out, I'm going to wait for those pullbacks, and I'm going to take prices all the way to 22,000. So that's what I'm looking at. Now I still have my sales on this. Pay attention to what's happening on the DXY. If this guy moves again to the upside, as I told you, you could see the pairs like NAS100 moving to the downside. So you can expect these drops to come on pairs like NAS100. So if you're not in any trade right now on NAS100, I would say just stand aside a little bit, wait for price to play out and give you more price action, so you can decide on what to do. So right now it's a little bit tricky, it's a little bit difficult for you to go in, simply because the DXY hasn't committed its move to the upside, and NAS100 is still struggling around an area like this. So we're looking at this. There's a possibility sellers are trying to come in, buyers are trying to come in. So when you have something like this, it's always very difficult. So price is going to take you out multiple times if you try to buy and try to sell around an area like this. So wait for this to get resolved, then you pick the direction. If it's going to the upside like this, you wait for this, you trade it all the way to 22,000. If it breaks out of this, you wait and you trade it all the way to 20,000. So that's it for me on NAS100. Keep it simple, guys, keep it really simple. Let's look at the S&P 500. So the S&P 500, this one took me out. This was a clean -1, so this was very easy. And I was really surprised with how the S&P kind of moved compared to NAS. And NAS is still struggling to go through 21,000, but the S&P just blew me out. So look at this on the daily time frame. Same thing. Impulse thing, swing, pivot point, set, swing again, pivot point again. Everything you see on the daily time frame is a swing move. So we're expecting prices again to pull back. The correction thing comes in, and you see price moving again to the upside. That's what I'm expecting. On the daily time frame, this is going to take time. So the next thing we do, we step down to the 8-hour time frame. So what we're looking on the 8-hour time frame, swing move again, swing move, price pulling back, pivot point, price starts moving up, pivot point, price moves again, and we haven't really tested the pivot points as of now. So everything you see on the 8-hour time frame, that is a swing move. So I'm going to clean this, and then we'll step down to the 4-hour time frame, because I think we have something we can work with on the 4-hour time frame. Now this is the S&P 500. This is very interesting. Look at this. Look at this move. So you have your impulse thing, you have price correcting, pulling back, giving you a pivot point thing. You have your swing move again, price pull back, inability to come back to the trend line thing, and you have price trading to the upside. So when you look at this on the 8-hour time frame, I'm going to clean this, and on the 4-hour time frame, I'm going to clean this. Let's play this out. You have an impulse thing, you have a correction. You have an impulse thing, you have a correction. So where is price currently at? What is price trying to do? So just ask yourself these questions every time you pick any pair you're trying to analyze. Ask yourself this question: where is price currently at, and where is price most likely going to gravitate to? So on the S&P 500, price is currently trading at between 6,000 and the next level above it. That's so we have 5,800, 5,900, so we have 6,000, so we're looking at 6,100. The next level has to be 6,100. So price is currently trading between 6,100 and 6,000. So if price fails to move below 6,000, the next area has to be 6,100. So I'm going to clean this. Let's edit this. So let's edit the psychological level. Again, it's very simple. Just put here 6,1, and that's it. That's how easy it is once you're using psychological levels. It takes like seconds for you to get the next level once you have the primary level set already. So where is price currently trading at? Price is currently trading between 6,000 and 6,100. Inability for prices to go through 6,000, we should see prices heading all the way to 6,100. Now, is there a trend line we can work with? There's a trend line we can work with on the 4-hour time frame, and I showed you this already. So you have your impulse thing, you have a correction, impulse is a correction, but this correction is not for the 4-hour time frame, and you have price moving again to the upside. So eventually you should see prices pulling back to this area because you have your pivot set. You should see prices pulling back to this pivot point on the 4-hour time frame, and for us to take prices again to the upside. While waiting for something like this to happen, now you can step down to the hourly time frame and see what's happening on the hourly time frame. So looking at this on the hourly time frame, you can put a trend line here on the hourly time frame, but this is not something I like doing because it's the hourly time frame. It's just for my entries, and there's going to be lots of fake outs on this lower time frame, so I don't pay attention to this on the lower time frames. But let's put a trend line thing and just understand what price is trying to do. You have your moves to the upside, correction, move, correction, impulse, correction, impulse, correction, and right now price slowed around 6,000. Just going off of this trend line on the hourly, you should expect prices to move all the way to 6,100. That's it. It's very easy. Now if you get a violation of this, let's say price breaks out of this trend line, pulls back, once it starts trading below 6,000, the next area I'm looking at has to be 5,900. If it keeps maintaining this trend line, we could see prices moving all the way to 6,100. So that's how easy it is. You're just doing a direction thing just to understand where price is at and where price is most likely going to gravitate to. So look at this one more time. Impulse correction thing, impulse correction, inability to go through this area. You could see prices coming back to an area like this for us to take prices to the upside. If price, or if the buyers are really interested in this, you might see price failing to break through an area like this, and the next area has to be 6,100. So again, impulse correction, impulse correction. This is not a correction on the 4-hour time frame, so you might see the 4-hour time frame correcting, and for us to see prices moving to the upside. So if you had to trade, let's say the S&P 500, you can see buys taking off. Let's say you get a pullback to an area like this, and you can see this buys something like this to the next area, that's 6,100. Let's correct this. So looking at this to 6,100, you might get a 1:3, something like this. Now if price comes in and gives you a deeper pullback, let's say an area like this, you're looking at the same thing, 6,100 target point. You're looking at 6,100 right there. Put this. So you're looking at this. Hold on, let's see. Yep, you're looking at 6,100. So you're looking at maybe 1:4, something like this. So it's just a similar move. Now one is deeper and one is more shallow, but that's the move you should be looking at, or you should be expecting on the S&P 500. So let's say all you can do right now, watch price, let price tell you what it's trying to do, and then you react from there. So don't get caught up in like in FOMO, like you missing out on these trades and stuff like that. Price is always going to be here, so it's not running, it's not going anywhere. Just being patient is a strategy on its own, so you need to master that as well and wait for prices to pull back. If you didn't take this buys, so let's say you didn't take the buys here, just wait for prices to pull back. It's going to take a couple of days, that's fine. Wait for these prices to pull back, and then you look for the buys. It's that simple, it's that easy. Alright guys, or while waiting for the pullbacks, you can trade the sells as well, only if you see the setup, if you see a proper setup. So watch this, I'm going to show you this. So look at this. So we're still on the 4-hour time frame. Let me show you something right here. We're still in the forward time frame. We had this impulse, we had a correction, we had an impulse, we had a correction here. So I'm looking at these highs right here and I'm asking myself, how is price taking out these highs? Is it impulsive or is it just a shallow break of the highs? If price just breaks this high like this and it's very shallow, it's not impulsive, then you can see prices coming back. You see a violation of this correction and you see prices selling. So that's something you can look at as well. So it tells you, price is going to tell you what it's trying to do. If you see the break of this high is impulsive, then you see price going all the way to 6100. But an inability of a price to break this area like this impulsively, then you can see price selling back, giving you this move to the upside. So that's something I'm going to look at, and if I see a setup like that aligns with what I'm trading, then I'm going to take those sales as well. Alright guys, that's it for me on the S&P 500. It's just a wait game thing for me on the S&P 500. I'm going to be waiting for pullbacks to come in, and then I'll look for buying opportunities again on the S&P 500. Let's look at the last pair, and that has to be gold. So this is gold on the daily time frame. So what are we looking on the daily time frame? Is the same thing. Impulse, correction, pivot point, impulse or the swing, correction again, pivot point. You have your next swing, you have another pivot point. On the daily time frame, we're expecting gold to pull back to an area like this for us to take the buys. This is going to take time, so you can step down to like the 8-hour time frame and ask yourself, what we're looking on the 8-hour time frame. You have an impulse, correction, pivot point. You have a swing on the 8-hour time frame. Now you have price correcting. This correction is not a proper correction for you to buy from the 8-hour time frame. I know I had a buy on this, but I was looking at something else and on lower time frames. So looking at this, you should expect prices to pull back to an area like this, so you can take these buys again, just going off of what's happening on the 8-hour time frame. So this is not a time frame to pay attention to. So let's look at this on the 4-hour time frame. Now I like what's happening on the 4-hour time frame on gold. Let's ask ourselves simple questions. So we had the same thing. We had an impulse, correction, price taking off, impulse, correction, price taking off, and eventually we had a breach of this trend line on the 4-hour time frame. So what is price doing? Where is price currently at, and where is price most likely going to gravitate to? So price is currently trading between 2700 and 2600. We had an impulsive move from the buyers, taking prices all the way to 2700. We had an inability for prices to go through 2700. And we had price coming all the way to 2600. So price is just trading between this area right here. You have an impulse from the buyers, you have a reaction from the sellers. But I have my buys, I have buys in on gold, and I'm going to show you what I'm looking at. So we had this impulsive move all the way to 2700. Inability, sellers came in. Inability, I was expecting buyers to step in again and test 2700 and test these highs, and that's why I had the buys on gold. So we might be testing an area like 2700, testing these highs again, and probably see prices crashing. That's very possible. That's my analysis. You might look at it differently, but that's my analysis. So that's my primary buyers on gold. So while waiting for this to happen, while looking at this on the 4-hour time frame, look at this again on the 8-hour time frame. There is still room for us to take sales to this area for prices to keep moving to the upside. I understand this. I know this is going to happen eventually. This sales, like the sales is going to come in. The sales are going to come in for prices to move again to the upside. I understand this. I see what's happening, but looking at this on the 4-hour time frame, I had temporary buys here to have a test of 2700, test this for us to look at those sales, and that's why I still have my buys on gold. And you can look at this on the hourly time frame. Look at this piece of price action on the hourly time frame. I don't use the trend lines on the hourly time frame, but if I'm doing like trade management, I'm going to pay attention to something like this. Price is moving up, pulling back. You have a move to the upside, it pulls back, move, pulls back. So you should see something like this, with price doing something like this and probably testing 2700 and testing these highs. An inability for prices to take out these highs, then you could see prices selling all the way to 2600. For you to understand this, you need to look at what's happening on the 4-hour time frame like this. So you have price trading here pulling back, you had a violation. That's just a pullback. We're waiting for this to test an area like this, and you get another drop. So I'm just looking for the final push again from the buyers, and then we see the drop. Now pay attention to this. You might see gold moving, so there's a possibility for this to go even higher. The only reason I'm not going to hold this bias all the way to 2800 is because of what's happening on the DXY. This guy looks like he's moving to the upside all the way to 107 and even taking out these highs. So because of this, like once you have this understanding of what's happening on the DXY, you're looking at a trade like this. I have buys on this, but I'm telling myself, because of what's happening on the DXY, I don't want to hold this buys on gold for too long. If I can test this psychological level of 2700, that's okay for me. That's maybe a 1:2, 1:2.2, and maybe test these highs, and we can see those sales coming in, and then I'm going to take those sales while the DXY is moving to the upside. I'm going to take those sales again to the downside. That's my thought process. That's what I'm looking at. So once the market's open, because I didn't manage this properly and on time, once the market's open, I'm going to close. I'm going to move my stops to break even on gold. So looking at this on the hourly time frame, so once the market's open, I think I had an entry around here. We had this push, price came back, and price has taken out this area. So once the market's open, I'm going to move my stops to break even and just let price play out. So my target again, 2700, and this area right here. If we can test these areas, then I'll be looking for sales all the way to the downside. It's just understanding how price is moving. So back to the daily on gold. Put this on the daily. I'm going to show you this real quick. Put this on the daily. So we have a swing on the daily. We're waiting for a correction. The correction is going to take time to come in on the daily time frame. So what we can do, move say to the 8-hour time frame. Look at this on the 8-hour time frame. Price is currently playing as a swing, so you should expect prices to move again to the downside, and you see prices moving to the upside. Now you can look at this on the 4-hour time frame for the confirmation, like, all right, cool, I see what's happening. So once you have a violation of this trend line on the 4-hour time frame, price is then going to deliver on the 8-hour time frame. So you have this violation thing. We're just waiting for another test again of this area, test this area, and we can see sales coming in. It's that simple. So that's it. So that's my analysis on gold, and that's what I'm looking at, that's what I'm watching. So let's look at this real quick. On the DXY, I'm expecting prices to move to the upside. That's my primary bias. I understand we can see a break and prices moving to the downside. That's fine. On the S&P 500, an inability for prices to take out this area. So if you see a shallow move around an area like this, there's a minor trend line. You get a break, inability around an area like this, then you can see sales coming in for like the S&P 500. With NAS100, you had this impulse, you had this correction, price is giving you this choppy movement right here, an inability for prices to go through this area. We could see a break of the trend line, and we see price trading all the way to 20,000. That's a possibility. Like everything I'm showing you, this is just my primary bias. On US30 as well, you had an impulse, then correction, pivot point, impulse again, inability for prices to go through 45,000. We can see prices moving all the way to 44,000, but there's a trend line thing here, so a pivot might come in, so you might see some consolidations around an area like this, and for price to take off from an area like this. So it's very possible. So that's it for me, guys. I've shown you all the pairs. I've shown you the primary bias I have on the DXY and all these pairs. If price does something else, I'm going to step aside, reanalyze, and take the opposite moves. Alright guys, so I hope you found this interesting, and don't forget to watch the previous week's market focus, just so you have an understanding of what we've been doing and how we've been looking at these prices, the DXY and these other pairs. And if you have any pair you want me to throw in during next week's market analysis, use the comment section and tell me. Alright guys, that's it for this week. See you during the next one. Bye for now.